Thanks so much for tuning into this earnings conversation with HDFC Life, where their Q1 VNB grew about 24% to YOY, in line with most estimates, I would say, but driven by 18% APE growth and about a 56 basis points increase in the VNB margin. Maybe it dipped a little bit sequentially, but year on year had a 56 basis point increase as well. Ms. Vibha Padalkar joins in to talk about how the start of FY23 has been like and what is in store ahead. Ms. Padalkar, good having you. Thanks for joining in. I hope all is well. Happy with the numbers?
Reasonably satisfied because of the holistic scorecard. So just to recap, top line growth, our total AP grew by 22%. This is including group plus individual. Retained our market share or the ranking amongst the top three in both individual, group, and hence overall. You mentioned about VNB growth, so that was satisfactory at about 25% growth. Margin expansion, Indian GAAP thankfully back into the red. Back into the black from the red at 365 crores, up 21%. And expansion in our 13th month as well as 61st month persistency, so quality of business as well. So yeah, well poised towards as we move into latter half of H1.
Excuse me. Some would argue that could the VNB growth also have been a factor of the base effect, or whether do you reckon it will continue into the quarters ahead? What's your sense?
No, I think it should be robust, and reason I say it is that mathematically, if you look at margin expansion, the way you've seen in Q1, and we continue to grow well on a total APE, then that kind of VNB expansion should come through.
Okay, I would reckon better product mix had some role to play in the margin expansion as well. There are people, and I read a couple of first cuts who are wondering if you can build upon this, or will this be a peak of sorts for the rest of the year on the margin front? What's your sense?
So with the margins, like we've said, it will be a smooth upward curve, and we have been very steady. You will not see a single year when margins have gone up or down, or a single quarter. So you will find the steady quarter-on-quarter increase, and there will always be pushes and pulls in terms of competitive dynamics. Competitive dynamics is one, investment in technology and customer servicing is the second one, while balancing that out towards getting better growth. So that will be calibrated, but that's something that we have been time and again demonstrating how we are able to achieve those kind of margins and uplift in margins.
Ms. Padalkar, is there
I just want to make a one point about base effect. Actually, a year before in Q1, our margins VNB expanded by 40%. So it has been a tall ask, and despite that 40% growth, we've been able to grow on it 25%. So it has been the reverse base effect, in fact.
Okay, well, I got that wrong then. Excuse me for that. In which case, Ms. Padalkar, I would love to understand how does a change dynamic of what is happening to inflation and interest rates in some fashion impact what could probable growth rates be? What's your sense?
So there's a positive and negative. The negative out first. We are seeing some stress in terms of budgetary allocations at a household level on protection, and this is pure protection. And just given all the stresses due to inflation, it is again, fairly conceivable that there will also be stress towards what is perceived to be an expense on term. It's not an expense, but that's how it has been perceived. However, on interest rate guaranteed products, some of the other savings products, we don't really see any material impact. It is almost as if things are reasonably business as usual. And also some of that is because rates are a lot more attractive today, whether it's in annuity, whether it is in the products such as Sanchay Plus, Sanchay Par Advantage, and so on. So people are actually wanting to lock in at the now prevailing higher interest rates. So that's why there is a little bit of offsetting impact of how interest rates are playing out on how customer buying behavior is happening right now.
In some sense, it's also a cycle that a lot of people haven't quite seen, but you would have seen such things in the past, maybe. So do you reckon these effects could be short-lived, or is it difficult to say that as well?
It'll take some time. Insurance typically has maybe a 6 to 9 month lag to any macroeconomic happenings. Equity is an exception, wherein equity markets, people tend to react a little bit faster, but debt markets, there is a lag. I'm hoping that some of this macro situation, global conflict eases off to some extent, as a result of which some of the supply side challenges also consequently ease off. But that's where the jury is out there. If this is prolonged, then why only insurance? But really, overall sentiment starts going down into a negative spiral.
Sure, they do. Just one quick question, though, maybe you briefly referred to it, but as much as we saw the dip in the individual protection, if I'm not wrong, the group protection numbers looked very well. Again, I mean, was there some other anomaly out here, or is this pure growth?
No, none whatsoever. We've almost doubled it, and we're delighted with that because we work across many, many partners, and that is very robust. And not only have we done well in group credit life, but also our attachment rates have continued to go up with our partners. So that is pure growth.
Okay. One final question, Ms. Padalkar. Most people have said that they would love to understand from you, and maybe you said this on the analyst call, but good to maybe repeat this here, the outlook on non-par and a sense on the competitive landscape, because all through the last 4 quarters, you also talked about it, that you hope that some of the competition tries to be a bit more rational. What's your sense on both of these?
Yet to see that. A couple of things that will help here, and I think we've also mentioned this to the regulator, that more disclosure will bring in rational behavior, hopefully. Today, there is next to no disclosure on embedded value, on assumptions against embedded value. In India, statutory auditors do not audit the liability side of the balance sheet. There's a disclaimer. There's a peer review, but peer review is very different from a statutory audit. So some of those things, not that I'm saying anything is untoward, I'm saying that it'll just help bring in some rigor to numbers that are put out, because life insurance is a long tail business. The risk management is important. One last data point is, and reason I say this, when you look at IRDA's annual report and you look at the risk that some of the companies are retaining on their balance sheet, not reinsured, but on their balance sheet, it has meaningfully gone up for some of the mid-tier players. Now that kind of corroborates what I'm trying to say, that if we are finding business that we're not very comfortable writing at these rates or retaining on our books, that business is getting underwritten somewhere else. And sure, maybe they have a different way of evaluating that life, but my limited point is that's happening along with very little disclosures. So that really needs to be ramped up. So any company that's say completed 10 years of their life should disclose embedded value at least once a year. Embedded value walk once a year, half yearly, something like that. I think that'll force rigor.
Okay. You just a question on the outlook on non-par.
No abating at all, and that's a good thing. Ever since we conceptualized and launched Sanchay Plus and then Sanchay Par, that is more on participating, but Sanchay Plus, people are beginning to understand reinvestment risk. People are beginning to understand, how do I lock in, and that amount becomes non-negotiable when I need it in my old age and so on. And so lesser of cannibalization into more shorter tenured products like fixed deposits or debt mutual funds is happening. And that's a good thing, because these are very different horizons for different needs. So happy to say that as far as savings, non-par savings is concerned, not really seeing a dent.
All right. Ms. Padalkar, wish you all the best for the quarters ahead, and thanks so much for speaking to us today.
Thank you so much. Take care.
Yeah.